The Bangko Sentral pulled the trigger once again on Wednesday and raised interest rates just a month after the first hike. The back-to-back 25 basis point tightening now brings the benchmark rates to the 3 to 4% range effective June 21.
In deciding to raise the BSP's policy interest rate anew, the Monetary Board noted that inflation expectations remain elevated for 2018 and that the risk of possible second-round effects from ongoing price pressures argued for follow-through monetary policy action. Although inflation expectations remain within the target range for 2019, elevated expectations for 2018 highlight the risk posed by sustained price pressures on future wage and price outcomes.
Majority of economists surveyed by Business World expected the BSP to keep the powder dry this month and instead tighten policy in the third quarter. But Governor Nestor Espenilla changed his tone ahead of the meeting and was signaling readiness to make a move soon. Espenilla says they made the move early in a bid to help arrest the second-round inflationary effects of tax reform. Prices of basic goods rose by 4.6% in May, and the central bank sees inflation staying elevated until September. They did cut the full-year average inflation forecast to 4.5%, which is 0.1% lower than the previous estimate. Still, that's beyond the central bank's target range of 2 to 4%. Adjustments in oil prices, increases in minimum wages, and additional excise tax on cigarettes by July are seen to push inflation higher. But by next year, inflation is seen to further cool to 3.3%.
We're still looking out whether inflationary trends will further broaden and whether there will be second-round effects. So this remains to be seen. Right now, the action taken, in our view, is sufficient for the information that we see at this point of time.
As for the reserve requirement ratio cut, Espenilla says it wasn't discussed during the Monetary Board meeting. Reporting for Business World, I'm Melissa Lopez. We are One News.